Hello, everybody. Today, I want to talk to you guys about how interest rates impact your Chevron pension lump sum amount and how potentially deferring taking your Chevron retirement plan in 2023 could be a valuable plan. My name is Stephen Chambers, and I'm a wealth manager here at Willis Johnson and Associates. So for those who joined Chevron prior to 2008, you may be aware that your pension lump sum amount is inversely related to interest rates. If interest rates go up, lump sum goes down and vice versa. So what's been happening to interest rates lately? Well, starting in 2021, the Fed has raised interest rates by about 5%, which has been the fastest pace of rate hikes in history, resulting in a lower lump sum amount. What this slide shows is where the market expects interest rates and where the Fed expects interest rates to go going forward. So who's correct? Nobody knows. It's very hard to predict these things. But what is certain is that the markets and the Fed expects rates to go down. If you see here in 2024, rates could fall anywhere between 1% to 2%. And then in 2025, another 1% to 2% drop. Right? So the key point to take from this slide is that rates could fall anywhere from 1% to 2% over the next 1 to 2 years. So how does this impact your Chevron lump sum amount? A couple of variables to note before looking at our illustration. We're assuming an average final compensation amount of about $230,000 and 37 years of service. So based off those assumptions and today's market segment rates, the lump sum amount could be potentially $2 million. If rates drop between now and 2024 by 1%, that lump sum amount could increase to $2.3 million. And then again, if rates drop 1% from 2024 to 2025, your lump sum amount could increase to $2.6 million. That's a $600,000 increase between now and 2025. So again, one option to consider if you are planning on retiring from Chevron in 2023 is to defer taking your lump sum pension until rates fall. Another way to think about it is taking your lump sum pension now is kind of like selling stocks once the market has already fallen, right? It's very hard to predict where the bottom of the market is, but it's much easier to predict if the Fed has reached its rate hiking cycle, which many believe it has. So now you might be thinking, what if I take the $2 million and invest it? Could the investment returns offset the drop in interest rates? Well, this chart shows hypothetical returns over a 2-year period and the growth on a $2 million portfolio. You would have to earn a 14% annual rate of return to offset the impacts of falling rates. Now, that's a high hurdle rate to achieve, especially considering most folks in retirement have more of a balanced allocation, which equates to about 8% rate of return over a long-term period. Right? So in summary, guys, the Fed has raised rates by 5%, negatively impacting your lump sum amount. The markets and the Fed are predicting rates to drop 1% to 2% over the next 2 years, which could have a major impact on the value of your pension. Therefore, it could make sense if you're planning on retiring in 2023 to defer taking your lump sum amount. As always, we never want to make financial planning decisions in a vacuum and want to evaluate all of your financial variables before deciding what to do. If you guys like this video and want to learn more about the things to consider before retiring from Chevron, please click on the link in the description to watch our free on-demand webinar. And don't forget to like us and follow us on LinkedIn and Facebook for more free educational content, or you can simply scan this QR code to follow me directly on LinkedIn. Thank you guys for watching.